Good evening, all. Welcome to Bro Billionaire. This is Raghu. How are you all doing? Hope you guys are doing great and made great money. Unfortunately, I was not able to share any educational video. Today, I'm bringing you a very good educational video which I use for my trading. As you know, I was totally occupied with work, and this week I did some couple of trading, and I did made around 35% in last 2 days. So this is how much I made today. It was 11K for 40K. So I just did, as you know, by morning my trade will be over. The last trade was a pure temptation, but however, it worked out well. So I told you when the market was reversing this morning in a Telegram channel. Hope that helped you guys as well. Now, before starting, okay, this will be a short video, I promise you, but understand that whatever I'm sharing is based on pivots, and it's a consolidation of knowledge. Like if you see my price action video, the reversal trading video, the R1 S1 importance, the R3 S3 Cambrilla pivot importance. Now, all these are the golden crossover. Everything is based on the pivot knowledge, and everything is unified. They are not separate. So what happens is when you understand this and digest it, you will start spotting the trades like me, and you can make a lot of money, more money than what I'm making if you're a full-time trader. Now, please understand this is a concept. Have patience. I mean, if you don't have patience, just feel free to drop. But there are people who are making hell a lot of money. One of the person who watched my videos, he said he has made 1.8 lakh in last 6 days consecutively. I mean, that's an amazing money, and I was very glad to see that. So my motto itself is anybody can make money. I mean, most of the times the beginning mistake is you people keep changing the strategy. Somebody said this, I'll follow that. Somebody said that, I'll follow that. Watch my RSI reversal strategy video, 15 minutes. Tell me Monday, Tuesday, and Wednesday, you couldn't have made the money. There were two stop loss, but stop loss was recovered on the same day, and on 3 days it gave more than 300 points in Nifty alone. Right, it's up to you how you utilize the knowledge I'm sharing. Now, without this, the method I'm going to teach you is where you can identify the reversal in the range bound. Understand, this will work like a charm in range bound. So there are different types of market days. If you have read Secret of Pivot Boss, you have a lot of things, but just to summarize quickly, you have trendy day, you have sideways trades, right, and you have range bound. Keep it simple. He will call it double distribution, trendy, and a lot of etc etc. But for you as a trader, trendy means what? Trend is this. This is trend, one-sided. This is sideway. Here it gave a range, but nobody can understand. It will go down. This is range bound today. Sideway to range bound. Range bound means market will work within two ranges, right? Now in this range bound, how you could trade is important. Now I would like to mark first, very important. On the 15 minutes candle, I want you to spot a peak top where, if this is the candle, this is the peak. In this peak, okay, either you can mark this or wick to body, wick to wick. What I mean is this wick to the next candle wick. Either it can be this as the resistance for selling or the body. Now here you need to be little subjective, not objective. The condition is on this 15 minutes candle, there should be two candles closing below that. It doesn't matter any order. It need not be in a V shape. It can be sideways as well. But two candles on the left, two candles on the right should be closed. That will be your resistance. Similarly, from the bottom also, two candles on the right, two candles on the left. 15 minutes are trading frame. Your trading time frame will be 5 minutes, but the markings will be on 15 minutes. And if there are huge candles like this, you can consider 5 minutes also. Now here, this is yesterday, understood? This is yesterday. Now in this yesterday, there is why I was telling subjective means. So we have one candle going down. This candle comes up. This is a sharp pin bar. If you see, this is a very big pin bar, right? If you want to make it big, just quickly see. This is a pin bar, lot of buying pressure. And then market went up above this also. And then you had a very big candle. Now, out of all these fall, where do you see the selling pressure? Yes, this is the selling zone. The selling pressure was this. So what will you do on such days? You will keep till the body. The price can go till here, but understand, nobody will mark, professional will understand. This entire zone is a supply zone. And this morning, where did you get? Watch on the left hand side now. Left hand side. Above R3. What is above R3? Above R3 is buying, yes? You know, from Candela pivots is buying. But how do you safeguard your money on a volatile day, especially on an expiry? This is where it comes into picture. After the first 5 minutes, was there a follow-up or was there a doji? There was a doji on 5 minutes. Now you know the upper resistance and selling area. R4 is a selling area. R4 is very close here. Now in this selling area, closer to the selling area, you're having a doji. Doji is indecision. All of a sudden above R3, you're having indecision. If there was another green candle breaking R4, trust me, it would have been a breakout, another trendy day. It did not happen. After doji, who made the decision? Sellers made the decision. Now tell me, what is this pattern? I have covered this in my video, so you should be aware of this. This is nothing but people call evening star. But in simple terms, if you understand, there is a doji after buying, and this doji and this entire thing is formed in the previous selling zone. Understood? This entire zone is selling, right, from top to bottom. You have big candles in 5 minutes. And after doji, you have such a selling pressure. Bears closed below the first green candle. When you have this kind of pattern, I mean, sometimes the closing will be above as well. Still, it will work. You need to wait for a follow-up to close below the first green candle. But when you see this classical evening star, where a Morubuzo candle or a strong green candle closing below, sorry, red candle closing below the green, or vice versa at the bottom, trust me, market will go down. The reason is not because they are evening star. Lakhs and crores of people or millions of people know this pattern. They know it will go down and people will enter more selling, which will add to the pressure. Got it? So this is trading with pivots with the pattern. You have a evening star pattern. In this pattern broke R3. From R3, what is your target? S3. And see, this S3 I marked from the bottom wick to body. So where did the market bounce this morning on 5 minutes? Say market has come down here. It has fallen. Okay. Will you enter here because it broke the low? Almost low. Low is here. Sorry. This is the low. S3 and previous day low is here. The low is not yet broken, but this swing low is broken, right? Swing low is broken. But still, when you see this supply, I'm sorry, the demand zone, where demand people can enter buying, and the previous day was a range bound twice, you will understand you have to be cautious. Let S3 get broken. What is S3? S3 is buying area. Why would you buy here? And what happens next? See, gap up, inside bar. This is where I inform people. Market will go up. It's not only because of the inside bar alone indicates pause. This is harami pattern, right? Bullish harami pattern, you will call it, right? Forget about the names. I call it inside bar because the close high and low is within the previous candle, high and low. So it is a pause in the ongoing trend. I caution people, market can reverse, but I have told them keep selling bias, and here it came. Now what is this? Wick to body engulfing candle. What should be your target? S3. Now S3 broke here, but after breaking, did you see a follow-up or candle came and closed above S3? When a candle closed above S3, yes, it hit your stop loss if you have entered, but above S3 is what? Buying area. Market just went up, right? You understood why this worked. Watch this one, selling, buying. Now, after this went up, this is again a wick to body engulfing candle, both 5 and 15 minutes. So what do you expect on the expiry? Market will go up, right? From here till here, maybe you could have made for 10 lots, maybe 30 points. You could have made 15, 20K or more than that. But anyway, near this zones, you're having the pattern. Now watch here. Where is this wick to body engulfing pattern is coming? Near S3 buying zone. Now, what are you waiting for? This could have picked here itself, right? The 5 minutes. Yes, the stop loss is just S3 on 5 minutes closing basis. Remember, guys, trading is always risk. That's the reason I said everything is risk. As long as you understand where to take that risk, it's called as taking right risk at right location. There's nothing more than, there's nothing better than pivots. Pivots are the best trading methodology where it provides the right location to take the right risk. Now, why do, if it is a today, say, let's assume this way, market is cracking above R3. Will you buy here above S3? Again, you have to use common sense. Market is not absolute. It's not objective. It's always subjective. So if you understand what I mean by subjective is, on this particular day, we have a strong market went, okay, high, low, high, low, lower highs and lower lows. So you will wait for this swing to be taken out. But why today I'm asking you to buy here? Because previously we have a range bound day and a supply area. When does this work? Please do not forget, this works like a charm in range bound day. So a previously buyers bought near this range. So the history will repeat again, buyers will enter in the same range. Previously sellers sold in this range. So history will repeat around this range, market will, around this selling area, people will again look to sell. That is how you need to understand. That is all I wanted to tell. The whole video is trading with patterns. Now this morning near the selling area, we had an evening star. Here you have wick to body engulfing closing above. That will give you more, what do you call, probability of making money. Now, one more chart and you're off. Now on a trendy day, definitely I'm not telling you that it will work, but I can show you how it worked on this particular day, right? Now, if you pull this down, wick to wick, you can pull wick to wick, wick to body. Usually if it's a long wick, I'll use this wick to the next wick. Market will respond there. See here, there was a kind of response. It tried to give a false breakout and then went down. The why market went down here is because there was a very strong selling zone from a previous day as well. This is a fresh zone. Always understand fresh zone. Now, after this, it gave a false breakout. And if you have entered, you know, R3, below R3 is selling, above R3 is buying. So you would understand from S3 it went to R3. So you should anticipate by default near R3, it's a selling area. Once it came and you saw a long wick, you know, it's a false breakout. You would know, yes, market will not break R3, it's going down. Around same area, market went down. Now, let's move forward. After this, this is a trendy day. Trendy day, I'm not anticipating anything. Still you can, so this one, okay? Watch this one. Below all the pivots, there's no pivot. You can add a 6. How would you trade this? So this is a pivot. the top of the first 15 minutes candle. Yes. So until this break, market move is down. Now here we have long wicks, wick response. This is the supply zone. And once this happened, now this will be the next wick to body or wick to wick. This will be resistance zone. Since it's a strong red candle, a big red candle. See, this is a big red candle. You can add wick to body. Now here, market comes, pulls back. Two candles, wick to body. This one, I'm talking about this one. Now, if you understand price action, high, low, high, low. So you have, when you have two lower highs, two lower lows, even if it is a range bound, you need to anticipate market is weak. Similarly, two higher highs, two higher lows, you should anticipate market might go up. Now here, this one was not broken. Market is coming. It was pushed down. So whom do you think is stronger in this? So first candle, very strong. Here pullback went down. Here sideways went down. Now it's trying to pull back. So you can call, oh, I have three black crows. Sorry, three white soldiers. No, it doesn't work. If it happening near pivots, if it is happening above the high, then you can anticipate. But you have two lower, yes, this swing, near this swing, see market breaks. If this is broken, right? This was on 14th February. See here. What do you see here? See how many times market has reacted? This candle also reacted in the same area. Now it comes here, try to break. This is not a strong candle. You know this is a selling area. And what do you see on 5 minutes? Reversal wick bar. You wait for one more red candle. So this becomes a evening star pattern near the selling area, and you know market is going to go down. So once it comes here, you know market might react, but what is the trend? Based on the trend, lower highs, lower lows, and market reacting with strong candles, you know market has a potential to break. Or you can add five EMA, and here if the candle is closing above 5 EMA, exit. If the momentum is very strong, it will never close above 5 EMA. It may just come back like this, top, and then it will go down. See here, it exactly reacted. The candle went up, then went down, because a lot of people think this is a buying. So they did not have enough energy to take. Once people started coming, they exited, they counter traded, and market went down. Hope this is helpful. Understood? This is all the patterns. You have a lot of other patterns. You can add any pattern. See here, same. I mean, this is the previous selling zone. So I'll give one more example, and after that we can wind up. I really don't want to bore you. This is all. This is all you have to do. Is it simple? Your trading methodology should be so simple that nobody should be scratching your head, because in option trading or an intraday trading, the decision should be fast. You cannot wait for the train to pass and then buy the ticket. So the methodology should itself should be so simple. That's the reason once I see, I will enter. See here. Now you can copy the top. You don't have a wick, but in the same area, it will react. In the same area, it will react. Now, if you want, watch this one. This has not happened in real time. You have one peak, two candles closing on the left hand side above this, two candles closing above the left hand side. Now where will you take the trade? When this is broken, because you know there is a supply zone here. This candle itself, you don't need anything. This candle, while the trading is happening, what happens next? You know this, oh, this will go down. It might go down, it might, but this will protect you. When you move, what happens? Market tested, boom, went up. There are several examples I can show you this way. Watch this one. Lot of times you will be, oh, above R4, let me buy it. Okay, this is the wick to body. See this candle, two candles closing on the left hand side, two candles closing on the right hand side. Now drag this one. When did the market move up? See here, it reacted, went down, it went up. Now here, how do you trade this? This should be traded with the trend. What is the trend here? I have shown you with CPR, with R3, S3. I have showed you several times, right? Overlapping R3, S3. So moderately bullish. That's the reason you saw sideways and moderately went up. Now, this is one of the very effective tool which I use in my trading. It always works out, and you can use it as a support and resistance if you want, and you can watch out if you use it with pivot with the patterns. What the patterns is, I showed you, right? Evening star, morning stars are the most common patterns. See, this is on 11th Feb. So where we just marked 9, 10th, 11th. Yeah, this is where I said market tested. Now this is the 11th Feb. So here market see went sideways, sideways. Here you have one morning star, one reversal pin bar, and a small reversal pin bar. But the catch was this candle closing above this peak. So after that, market went up 1, 2, 3. It's like triple bottom. Market goes up. I wanted to show you one more example and then the last example. I'm not sure. I just want to ensure that you guys are confident enough of the methods I'm teaching. That's the reason I'm making. Now here, see, this will be the confusing aspect. Okay. The confusing aspect, what this is what 27 Jan. So this scenario I want to cover. 27 Jan. Okay. Market is reversing. This is the resistance on this particular day. Double top, market is going sideways. This alone is enough. Now imagine, go to the first part of the video. When you see on the left hand side a big red or big green red candle, fresh area, this area is not a tested, not this candle, it is getting tested now, right? So when you watch this fresh area, I'm going to make it big for you. Be very, very cautious. Market has fallen here on this big candle. Always people will be waiting. The small red candle, can people wait? Yes, people can be waiting there, but the high probability is this entire candle is supply. People will be watching and immediately see how fast the momentum took the price down. One was this week to week, and the other clue for you guys was this one. Now if you make it for 5 minutes, 27th, after this we are done with the video, and hopefully this will be helpful for you. Come on, man. This is the best. Go to 27th. Okay, 27th. Where is your markings? What is the pattern you see here? All you need is a evening star. You need a candle to close below. After that, market tried going, it did not sustain. What would be your stop loss? Above the evening star. See here, you don't see any pivot. The pivots are so wide. Sometimes you may think, oh, I want to enter here. Yes, if you add pivots, there might be something. I don't know what it is. Yeah, this is previous day high low is also not here. So you can understand this is a area of interest where people can take price down. and above R4 is a breakout, and breakout is not standing. Below R4 market will go to R3. Below R3 market can go to S3. Since the pivots was very wide, it came. And if you understand the same supply and demand, one candle, no, not this. One candle, left, right, center. Wick till this green candle tip, or you can keep it to the body as well. Where did the market stop? Exactly near the supply area. Based on your experience, if you add this, you will have a very high probability. Got it to trade. You can watch out. And but if you're trading, right, understand the pivots first and then start using this. So you will have a different way of understanding the market structure. In the live market, you know where are the supply zone, where are the demand zones, or the selling areas or buying areas, and most of the time it will work. And when it does not work, you know, you have a counter trade opportunity. Hope this helped. Thanks a lot. Have a good day. Please do subscribe, encourage me. Your likes and your comments are the biggest encouragement for me. I will keep bringing you the quality videos where it can change your trading career to a new level. Good luck, guys. Good night.